What is going on, everyone? Thank you for tuning in to another episode of Clocking Out. I am your host, PR, the King of Hearts. And today we have a new guest speaker with us today. Guest speaker, can you please introduce yourself, tell us your name, where you're from, and give us a little bit of a brief background of what your profession is and your experience in the space?
Hey, hello everyone. PR King of Hearts. Thank you so much for having me on. My name is Sidrit Veseli. I'm a mortgage broker. I have my own company, which I launched last year. Essentially, in this space for the last 6 years, but in the banking industry as well before that for eight. It's ever since I started my professional career, I always have been helping people with their finances. So I somehow knew that that was gonna be like my calling. And back in 2018, I decided to move into the mortgage space, more focused towards real estate, but on the financing part of things, where I help people with buying their first home, investment property. So yeah, it's been a very rewarding experience. It's one of the largest purchases we'll ever make, and it's so important because it helps most of us build wealth for us in the medium to long term, but also generational wealth for our kids. So yeah, I mean it's awesome. I mean, I bought my first home in 2015. We came to this country, me and my family, back in 2005. We had very little, so it took us 10 years to buy that first home, a two family. Used an FHA loan, 3.5% down, like in a matter of 5 years, the value of that home almost doubled. But the reason I'm sharing that is because I want to show you how powerful real estate can be. Even though it's gotten very expensive, there's affordability issue where a lot of people cannot afford a big mortgage or a big monthly payment, but it's still one of the safest ways to create wealth over the long term. It's considering where all the regulation is right now in the real estate and mortgage space. It definitely makes your primary residence one of the best ways for you to create wealth.
And I like that you shared and you touched on a little bit of all those things because I'm pretty sure everyone, not just me, I think everyone is trying to find a way to get a home. Everyone would like to own a home. Everyone would like to invest in that, whether it is for, like you said, investment reasons to where, you yourself or your family can benefit from it in the future, or it's just that safety net of knowing like you just have a place to call home. And I'm pretty sure myself as well as many others look at it as it's something that's impossible, because it's like you said, it's whenever I know myself and other people, if we go online right now and we look at it, all we see are these crazy numbers, or we see all these things that we don't qualify for. And sometimes it's just because that's the way the internet is. The internet likes to push all the crazy stuff that people like to see first, and they really don't dig deep enough to see that there are other options that they can actually qualify for, that make it possible, that make it affordable, that give people hope to say, you know what, I could probably do this. So that's why I really wanted to talk to you also, because I myself, I don't know nothing about this. Whenever I think of someone having a house, I look at it right now like there's no hope. I feel like it is impossible for me to have a house, whether it's because I have bad credit, or I don't have enough money saved up, or I have enough money coming in, or invested in enough things to show that I have equity, or I've been or anything as collateral to get in investments or loans or whatever it is. So I want to basically learn from you as much as I can how someone, despite whatever situation they're in, could find some way to try to have that step, or I mean that foot in the door, where they can at least try and find some type of way to start working their way up to owning a house, or the proper steps on how to, before they even get to picking a house or knowing what they can afford, just making a proper budget or looking into things and knowing the proper steps to take to either building your credit or getting a loan, or what is it that
Yep.
people look for basically, and saying, what, this person's a good candidate for this house. So with all of that, I want to just start by saying, if you could just give us a brief little background of yourself personally, not just your profession, but who you are, and what was it that really made you get interested in this, and to the point not only where you're in it as a business and an investor and you're doing it yourself, but also what makes you so passionate about teaching other people and sharing that information with everybody else as well.
Yeah, no, so much to touch on. Personally, I mean, I'm from Albania originally, so moved here when I was 15. Like I said earlier, like we were at a point where we had nothing, just enough to cover rent. And like I remember like asking my dad for money, to like go out with my friends. He didn't have enough at the time, and like that, that made me start working at a young age, like many of us, like I'm nothing special in that sense. But it made me realize, like I started working with people, from, like all my jobs have been like client interaction, whether it's been from working in a supermarket and other more professional, like jobs. Um, so personally, like I went to college, went to Suffolk University, like tried to like polish myself, like professionally and whatnot. But that for me, I would say like like my calling, I would say, was when um, like in college, like I met my wife, so I'm like, okay, how do we do better, how do we get out of this? um but it's I think day-to-day people, working with, like starting from where I did, where we literally had nothing. I think that made me more passionate about helping others. That fueled like my passion. um I made many changes before started in mortgages in this industry. I was a teller and banker. I switched a lot the first like 8 years of my career, moving from one bank to another, trying to do better. And I know that those changes, like scare most people, like moving from one job. Literally, sometimes I had like 6 7 months in a job, and I moved to a different bank, trying to improve, get better, make a little more money.
Exactly.
But I feel like that gave me the confidence, to like do bigger things and jump into the mortgage space, which I went personally from making a six digit, salary job to zero commission job. But my goal was always that, hey, I can do something bigger for myself and impact more people with their largest purchase ever. Um, so yeah. So if you want to touch a little on the mortgage space, and I want to break it down to you, like for what you were saying, like a lot of people are in this situation where housing is so expensive, and I think my job personally is to educate as many people as possible. I try to do that through social media, one-on-one conversations, Zoom, small groups of people, 10 to 50, doing networking events. Uh, the I'm gonna try to break it down. The simplest way to do it, I'm gonna say, is knowing these three things. What's important when you buy your primary residence is credit, income, and assets. So once you understand a little bit of each piece, then I think you'll be okay to try to find something out there and know that you have a chance to qualify for a mortgage. You may not be able to afford a $5,000 mortgage, but these will give you the like a starting point. So credit, as we know, credit score is super important, right? you need at least, I would say, to get something decent out there, you need like a 620 credit score or higher. Okay, even a 620 credit score, your rate will be impacted quite a bit, but the investors will still get you let you get a mortgage, right? There are programs under 620 as well, but ideally you want to be at 620 or higher. There are FHA loans, which is a government-sponsored program, which they'll give you benefits on the rate even at a 620 credit score. So that's the first piece. Credit score, super important. My advice to everyone just starting out, open up a couple of credit cards. Don't use them. Use them once a year, buy a cup of coffee. But just by having those credit cards, even if they're staying at a zero balance, what's happening is on the credit bureaus, it's being reported that you're on time making a payment every month, even though that balance is just reporting zero every month. So that's how you build history, and that's how you build a credit score. Probably over, if you have a couple of credit cards, you're just starting out, zero balance. In the next few months, you'll have easily a 700, 720 credit score. Now, obviously, different kinds of credits, auto loans, personal loans, they may help, but the major one is having a credit card open, starting to build your credit length, and also starting to build your credit score. Once you have that, the second one is income, right? Income, you need a job. The investors want to make sure that you have a stable job. That could be a W-2 salaried hourly job, or it could be a self-employed. Now, you may have heard this before. You need a 2-year history. Okay, by having a 2-year history, the investors consider that as stable. And the 2-year work history, you could have changed 5 jobs as long as you have history to show that, hey, I've been working the last 2 years. Ideally, those jobs want to be full-time positions, but that gives the investors, they're asking to see a stable income, which they consider something full-time, 40 hours a week or 37 hours a week, and it's been stable for 2 years. The likelihood that that's going to continue, that's very, very high. So that lets us calculate how much in income how much in income you have and what you can afford with that income. And the third piece, just so we can keep it kind of together, is down payment, assets, right? We're looking anywhere from 3 to 5% down. So, you're looking anywhere from, for let's say if it's a 500,000 purchase price on a single family condo, multifamily, you're looking anywhere from $15,000 to $25,000 in down payment, at minimum, unless you are a veteran, like considered a veteran. Then there are options with 0%. But for most people out there, I would say 95% of people out there, you need at least 3 to 5% down payment. And also keep in mind that you do need the down payment, but you also have to figure out the costs of closing on the house, right? Which typically can be 2 to 4% of the purchase price. So you also have to, figure out how are you going to get the funds to close on the loan. If let's say you're tight on funds, and there are many ways, for example, if you have family that can help you out, they can gift you funds to close, and they can help you with down payment. There are down payment assistance programs. Now, a lot of people hear about these programs, right? But they don't do the legwork. They don't do the research.
100%.
Now, I get people coming to me and say, "Hey, Sidrit, I've heard about this great program. It's 25 grand down payment assistance." I'm like, "Great, okay, but you have to do a little more research to see if you qualify, because I have a lot of the client's data and information, but I don't, I cannot personally apply for the down payment assistance unless, it's something that I work directly with my lender. A lot of the down payment assistance are offered through the cities, towns, municipalities. So clients would have to go directly, give them all their information. If they get approved, we use it, we give that information to our lender, and it's all like done at closing, like the agency, whoever's providing this down payment assistance, it, like will provide those funds. But like I said, the biggest thing I see with down payment assistance funds is that most people, like, they're interested, they like the fact, maybe free money, although in many cases it's not free money because you have to pay it back when you sell your house. um, but yeah, it's an option. It's an option for people who don't have enough funds. Um, Other ways to cover closing costs, not down payment, it's called a seller credit or seller concession. So when you make an offer, you tell your agent to let's say, ask the seller to, for example, give you $5,000 in seller credit. So it's technically, you made an offer for 500, but you're asking the seller for 5 grand, let's say, towards your closing costs. That 5 grand gets applied to your closing cost, and essentially it's like you're buying the home for 495.
Gotcha. Okay.
You see what I mean? So there are many options for first time home buyers out there, but like I said, first three things: have have a good credit, 620 or higher, I would say. Have an income or two incomes. If you're going to have two incomes, you need two jobs for over 2 years. So both jobs, or having, showing history of having two jobs for 2 years if you're going to use two incomes. And third one, have something in down payment. Okay, or
So
have a way. How are you going to get the down payment to buy your first home?
the first based on everything that you asked me, I mean that you asked me, that you shared with us, because all these things are things that I've heard of before, and it's just like you said, a lot of people hear about these things and hear about the help, and then they only get like this, they only get the good information, they only get that, oh, you could get this and you can get approved for this if this, but then they don't take that step, like you said, to really dive in deeper and do the proper research and the legwork to really know what's the next step. Like, it's there, what's possible, what are you actually able to get, what can you qualify for, what are your, and I see that you mentioned FHA loans, and
Mm-hmm.
you're mentioning credit and all that, and these are all things that I know people are concerned about. People are concerned about their credit, if it's good enough to get a loan or not. People are concerned about how much they're going to be paying for the loan, how much they got to put down. They all these things all come together, and it is things that take time. I know a lot of people think that it's just something that they fill it out, and then within a month or so they can go and pick out a house and they're good to go. And it doesn't work like that. A lot of people don't like to hear it's going to take 2 years for you to build up that history of you having an income, or to fix your credit within a couple months. And then, a lot of people get very impatient, but it is something that is beneficial. It is something that pays off. And a lot of people seem to forget that it's not just for getting a loan for a house, but all these things can help you in many other ways also too. Having a good credit and having money saved up and money coming in can help you do a lot of other things, not just get loans and get approved to go get a house, but you can go get a car and like a bunch of other things. There's a lot of benefits to it.
Exactly.
But the first thing that I wanted to touch on is how you mentioned, you can have multiple incomes and everything. So the main thing is that that I wanted to ask, what if you were to do this with somebody else? Like, what if, is that something that can happen, or is it just the one person? Let's say you're married, you have your wife. Could you both put your stuff together and both go for a loan for a house, or is it
Yeah.
better?
Yeah.
But
100.
but would that be something you would recommend, or do you think it's better to go it individually? How do you think is good to go about that when it comes? Because again, whether it's marriage or being in a relationship, it's something it's you have to make sure you're committed. Because if things go another way and you split up, that's another thing where you have to think about who gets the house and all that stuff. But if everything is solid and they're in a good relationship, and that's not anything you have to think about. I'm just mentioning that just in case anyone's listening, so they have that in the back of their mind. But let's say everything's good and you have a solid relationship, you know you're not going nowhere. Is that something you would recommend a married couple to do, or a couple to do, if they're taking that first step? Or do you think that's something they should do after they've both tried individually to get a house by themselves?
Yeah. So it depends on the circumstances for one, but I would say definitely if you're looking to qualify for a bigger house, I would say two incomes are better than one, right? You're definitely going to qualify for more money. Now, every couple has different goals, you know. So some people think that, oh, by applying separately, like one person buying one house first and then the other buying the second house, let's say a couple of years down the road, maybe they're getting more first time home buyer benefits. I don't really think, you know, that's the case. Some people do it, but personally I'm pro. You know, like when I bought, you know, when we bought our house with my wife in 2021, we used both of our incomes, unless there's a specific reason why. Like for example, right, your spouse has a 520 credit score and you have a 780. Yeah, you know, it doesn't make any sense
True.
for you to put your spouse, because you wouldn't qualify for a loan if
Yeah,
one of your partners that doesn't have excellent good credit, right?
exactly.
So in that scenario, yes, one person would make sense, but um you know, like if it's let's say both people have 700 credit scores, you know, like they both have decent income, similar debt, then yeah, it makes more sense. Most people are trying to get something that will, you know, the you know, a decent size, you know, not too big, not too small.
And
um
when it comes to like the credit scores and everything, and the FHA loans and the down
mhm.
payment assistant programs and everything, are all of them, is it difficult to try and combine all those together? Because I know sometimes, like when you try to go for like an FHA, well, not that I know, but I know
Mhm.
sometimes when you try to go for like government assistant things, they limit to how many things you can do at once. Is that the same when it comes to getting a house? Like, could you go for an FHA loan and then go for on top, like a down
Yeah,
payment assistance
yeah,
program, and you can combine those together?
yeah,
That's
yeah,
not
yeah.
something that's frowned upon or anything, or that would.
No, no, absolutely not. No, FHA actually, I think it's gotten even better over the years. For example, last year FHA PMI, like which is private mortgage insurance, it dropped by like 30%. So PMI, like it's cheaper on FHA loans. By the way, for those who don't know, PMI, you pay it's a monthly payment that gets tackled onto your mortgage for not putting 20% down. And it may sound terrible, you know, that you have to pay this extra 100, 200, 300 per month, but it's given you the ability to buy your home with 3% down.
Okay, then that's what I was curious about, because it's like, it's again, I'm trying to look at it from the perspective of people such as myself, who I don't have amazing credit. I don't have uh, that much money coming in. I don't have money saved up, or assets like stock or anything like that that I can have, that I can use as collateral, or I can use for, you know, to show that I can give something back in collateral for an investment. I mean, for a loan or anything like that. So
Mhm.
things like that, I've always thought about. You know, it gets intimidating when you see things like FHA loans and all that stuff, and you start reading it and you see like all these numbers being thrown around. It gets very overwhelming, because one, there are people such as myself that have never even touched money when it
Yep.
comes to that amount, you know. And then you think about the responsibility behind it. Then you start seeing the payments and the percentages and all this stuff. And the number one thing that I tend to overthink about is the way that the market is. You always see, because again, a lot of us just run to social media. A lot of us run to the internet, to Google and all this stuff. And always the first thing that pops up are always like the drastic, crazy stories, and they're always exaggerated. Of course, it's the internet, but when you're trying to search for information, some people hesitate to ask another person such as yourself willing to give the help. Instead, they go the route where they don't want to bother no one, so they start doing their own research. But sometimes they start getting thrown into the wrong direction, and then it
100%.
starts. Yeah, they start losing hope. They start looking like, oh, well, this person did this and this, but they have a bunch of money. That's why I really wanted to talk to you, because, like you mentioned, like you didn't have anything, and you started from not having nothing, and you built your way up, and you actually, like, you made it happen. So it's like I hear stories such as yourself, and then I see the proof in it, and it gives me hope. Like, if this guy did it, there's a possibility that I could do it as well. So my thing is like, what would you say is like really bad? Like, I know you said, like, at least if it's 620 is good, but besides for credit, when it comes to like income, what do you feel is like a good income to show that you're reporting, or a good amount of money that they would, not necessarily a good amount of money to make people feel like they're not good enough from what they're making, but what do you feel like looks good on paper or helps people's
Yeah.
chances more? Does it matter what type of job they have? Like whether they're working in a hospital or whether they're a security guard? Does it matter? Does it affect them, like what the job entitles, as far as if it's something community based, or if it's retail, or if it's working at a bank, or any of those things? Like, I guess, like, help your chances more because they look at it for some reason. Like, you work at a bank, I don't know, or like you mentioned being a veteran, like all those things I know help in some way, shape, or form. Is there anything as far as having a specific type of employment that would also help as well, besides just the length of time of 2 years
Yeah.
or whatever?
Yeah. So I would say no right or wrong answer. Any type of job you could be doing, how you get paid may matter. Salaried employees, like for example, when you're an hourly employee, it doesn't matter. You could be in any industry, right? We're talking now about W-2 employees, right? Hourly employees, I have to average out your income over the last 2 years, okay? Which sometimes year one, let's say 2022, maybe it was a little lower than 2023. You're making more money, and now you're making even more. But because it's hourly, we have to average it. If it's salaried, let's say tomorrow you're now hourly, tomorrow you start a salary job, and it's now, let's say, double than what you make. The investors consider that as even more stable, so we'll take whatever that salary is. So that should help you qualify for a little more money. In terms of minimum credit score that you mentioned, I would say try not to be under 580. 580 is the lowest for FHA loan, but FHA does have these manual underwrites. I'm not an expert in them. I'm not going to say that I am, but it will allow some people to go as little as 500 credit score, but they have to have they have to have, like, they need to show some factors, some things like having like 24 months of like rental payment history. They're called compensating factors, right? So FHA will, may let you get a loan up to 500, like as low as 500 credit score, but they will ask for more things, and they will limit your debt to income ratio. So just to give you an idea, for a housing payment, FHA loans may go up to a 47% debt to income ratio. If you're in that bracket, that you're under 580, they'll limit you to like 36, 37 housing debt to income ratio. So not only you have a lower credit score, but you can also afford a smaller house too. So it kind, you're going to be limited with a 580 or less credit score. So 579 or less credit score.
Gotcha.
So yeah, I would say ideally try to be at 580. Um, I would say if there's some, I'm not a credit expert or credit specialist, but I'm gonna say there's annual freecreditreport.com or freeannualcreditreport.com, or I think it's just annualcreditreport.com. It's a free website. They will get you, we can verify it after, and you can put it in the show notes or something, but it will give you 3 credit reports for free once a year, okay, from all the 3 credit bureaus. Why that's important is you go in there, you don't need to see your credit score, but you can, again, talking about doing some work for yourself, you pull up these credit reports, you see what's being reported late, what you have in collection, what's actually impacting your credit score. Derogatory remarks, maybe it was a past health bill that went into collection. A lot of times people don't know, but you can dispute a lot of things and try to get them out. It may take more work. You have to send letters in to these credit bureaus or agencies. Maybe they did something illegally against the law and something is in your credit that's impacting you, not allowing you to buy a house, essentially. You dispute some of these things. And sometimes we're human, we make mistakes, but there's also companies that make mistakes too. And a lot of times, like for example, right now, if I'm not mistaken, like for medical companies, they cannot send in a bill less than 500 to collection anymore. So and this was passed, I think, during the last year and a half or 2 years. So if you have medical bills under 500 in your credit report showing up, that could be something that you could dispute, right? But without knowing, I mean, good rule of thumb, I would say have Credit Karma in your phone. Don't use it to open, different type of credit for no reason, because they'll make you a bunch of offers when you're on there.
Yeah, and then you get excited and start jumping at anything, and then you don't even look at the interest rates or anything like that. And then
Yeah. But use it as a tool to help you guide to see where your credit is. And sometimes it will even give you tips. Hey, your credit utilization is at 80%. If you drop it under 50, your credit score can go up. But yeah, and a lot of times Credit Karma will let you start that dispute process right then and there too. It may link you to other websites, but it's a good tool. And the other one, I think it is annualcreditreport.com. Sorry if I mixed that up earlier.
No, yeah, and in case anyone who's watching this, whether you're watching live or you're watching the pre-recorded, all the information that he's sharing, I'm going to have it in the description below, as well as all his social media information if you want to reach out to him and ask him some questions yourself, or even possibly even work with him on getting your first house. But before we go on any further, I wanted to just clear on some things before I started asking you things as far as you helping other people and the challenges that people may face or that you face with certain clients that you work with. So you would say that basically the best way to go about this, correct me if I'm wrong, would be first to analyze people's position credit wise, to see what your credit is like, what's affecting your credit, and then see where you stand on that before you start seeing what type of programs that you can qualify for, or what type of house you could get. I think that would you say that's the best way to go about it, to first check your credit and see where you stand there first, or do you think they should
no I mean, have an idea where your credit is. My first advice is going to a loan officer like myself, a mortgage broker, or a lender, whichever you prefer. I like to Google people or search for them on Instagram, make sure they're legit, see some reviews, but go to a loan officer and apply for pre-approval. That's my if you have a good loan officer by your side, you do that initial pre-approval, even though you're not ready. Someone like me will tell you without hesitation, hey, you got to work on your credit, or you don't make enough in income, or hey, you need more in down payment to make this happen, or find a down payment assistance, or a combination of the three. Okay.
Gotcha.
Instead of, I think this is the easiest way. I pre-approved a client yesterday and he was shocked. He could afford a 900,000 two-family with him and his wife.
Nice.
And like he started with like a 500,000 to 600,000 condo. He's like, let me see, and condos are not cheap in Boston any longer. housing is not cheap anywhere. But
Yeah.
and anyways, he was shocked to know how much he would qualify. They both had good credit. They both had good incomes, solid incomes, very little debt, and they had enough in down payment. So a lot of times people don't even know that they're ready to go. Now it's a different question of what is your budget, or what are you okay with in terms of paying monthly. That is different from person to person, family to family. um, that's where you need to sit down yourself and see, hey, am I okay with paying a $3,000 mortgage? A $3,000 mortgage today can afford you much less than it could in 2021 and 2020, because the rates have gone up so much. You see what I mean? So I would say, if you're unsure, you don't want to do too much work yourself, go in, talk to a lender, be like, hey, I want to do a pre-approval. Don't even give them too much background. Just be like, this is roughly what I have in down payment, but I just want to see where I am. I've never done this before. Let me see what we can do. And they'll tell you. A good one will definitely tell you, hey, this is where you got to work on, or hey, you get pre-approved for 300 or 500. You give them an idea. You tell them, hey, ideally I want to buy a condo or a single family in this neighborhood, just to, like, give them so they have an idea, like, what your property taxes might look like. You make that application. Most lenders now, they're online. You don't even need to meet in person.
Yeah.
You upload your W-2s, pay stubs, bank statements online. They pull your credit electronically. And typically within 24 to 48 hours, you find out what's missing.
Yeah.
But there may be some not so good loan officers out there, and they see that you don't qualify, and they may not give you the time of the day.
I get you. Yeah.
Unfortunately,
Yeah.
like, not you specifically, but
No,
everyone.
I understand. Yeah. Just
It-
another thing I wanted to ask, what about the location? Because another thing I'm pretty sure people think about is, like, I live in New York and everything here is expensive for no reason. So the thing is like, of course, I want to get a house, or I want to, like, do all that like other people, and the thought of moving to another state, or do you think that is a smart move? Does that affect anything? Let's say, just for an example, I'm here and I have everything built up, but after I tried going for a house here, I see that it's too expensive, so I want to go somewhere else. Does that mean that I have to start from scratch? Everything needs to be, I need to have 2 years of income and everything in that specific
no,
state, or any,
no,
so it doesn't matter? Oh, okay. See, that's something I was curious
no,
into, because I look at it like, in New York, it's expensive, but Texas seems a little bit more affordable, as far as like getting a house, or like space, or whatever you want to look at it as. It doesn't look as crazy as it is over here in New York. So I've always thought I would like to go to Texas, but then in my mind, I'm like, if I go to Texas and I want to get a house or anything like that, I can't just do that, because now I need to start from scratch, and I need to get income, 2 years of income and all that stuff specifically in that state. But that's not the case.
no, not the case. No, I mean, you could use, like, for FHA loans, FHA, like, guidelines. They don't like when you have a big gap in employment. Try not to have an employment gap of no more than a month if you're gonna go for an FHA loan. But for regular conventional loans, even if you have like a 1 to 3 month, like, employment gap, you'll still be okay, as long as you're back to working for a month, and it's a full-time position or it's a salaried position. You'll be okay, because whatever other jobs you've worked over the last 2 years, that counts as history. Doesn't matter what state, like, it's still considered income. And as long as you can prove that income, whether through W-2, or if you're self-employed with your taxes, you're okay. You're okay.
And
um
is it different? Like, is the time frame as far as 2 years different depending if it's like you said, an on the books job, W-2, or if you're at like an independent business owner? does it change
Like,
the time frame of like what you need to have coming in? Like one is the time frame as far as the windows of having 2 years or more different, or the same is for like the income? Does the income need to be more, or like a specific amount? Because like having a job on the books as W-2, it's different. But
correct.
does it matter? Could it be the same exact I guess what is it, like the lowest
Industry.
amount or whatever? Yeah, like limitations as far as like, all right, if you have a W-2, if you have a regular on the books job of a W-2 job, that's 2 years. And does it need to be a specific amount? Like, do they like frown upon if you only make a certain amount of year? I know it affects what you pay and what you're approved on, but
Right.
look at it like, okay, this person actually has a job that's on the books and it's a company that's been existed for years, and then there's this person over here who, yeah, he has income coming in for 2 years, but it's an independent, self-owned, self-ran business. Do they look at one over the other because of that, or does it not really matter?
No, it doesn't matter. So if you are not related to that business, you're not an owner in that business, it doesn't matter. Like, they're not gonna go in and ask the business owner, hey, you're getting a W-2, you're getting a paycheck. Those are, that W-2 is being filed with the IRS, and the banks can verify it because they get IRS transcripts that money is showing up on the other side to the IRS. They're not going to go to the business. But when it comes to being self-employed, couple of ways, right? You could have a business that you get business income from it, and you could be getting a W-2 income from that business, from your own business, right? If you're getting both, we have to see that the business has been stable for at least 2 years, meaning to show 2 full-year tax returns. So let's say if you're going to apply now, we're going to need to see that your business was started. We have a full year in 2022 and 2023 if it's your own business. Same thing for self-employed, that it shows up on your own Schedule C. You don't get a W-2, but your income passes through your own personal tax returns. In that scenario, we'll need also 2 year full like tax returns, that business being, so from January 1st 2022 until end of 20, like January 1st 2023, that's 2 full years. So let's say someone that started a business in 2022, on January 1st 2022, they could use that income fully right now to qualify for a mortgage.
Oh, okay,
In 2024,
I
because
got
we
you.
just filed 2023 taxes.
Exactly, yeah.
So for self-employed, it's a little more different. Income gets averaged. So a lot of times when you start a new business, there's not a lot of revenue, not a lot of income, or even if you do have income, you have a lot of expenses with startups. So your bottom line profit may not be much the first year, and then the second year, like you may have done so much better, but we're going to average out the total profits over 24 months. So which will your income will be lower,
Gotcha.
but in turn, your other question too that you mentioned, there's no set guideline on how much income you need to make, but let's just say this, just like make it easy, hypothetically speaking. If you make $3,000 a month in gross before tax income, right? You have no other debt out there, you may be able to qualify for a $1,500 mortgage. Now that $1,500 mortgage should include your taxes, insurance, and/or condo fee.
Gotcha.
Okay, so it's like let's say up to 50% of your monthly income before taxes. Now, 1,500 today is much less than 1,500 in 2021, what
Yeah,
you can afford. And also it will matter on how much down payment you put down, right? Someone putting 5%, 20%, 50%, that will make a difference on what that 1,500 means for one person to another.
exactly.
Uh,
Yeah,
so
that's
yeah,
That's yeah, it's a lot of it does get overwhelming when you break it down like that. It's not hard to understand. I guess what it is that when people are having the conversation of, getting loans and investing, and they look at it, they hear all of that, but then what makes it seem really overwhelming is the time frame. But then again, it's like we really don't notice that time really goes by like this. Like 2020 and 29, I felt like it was just last year, and I it still doesn't feel like it's 2024. Like it's hard to believe
Same.
all these. You get what I'm saying? So a lot of people don't realize that, and especially if you're dedicated and motivated to something, those days go by like nothing, because you're going to be sitting there, you're going to be saving up, you're going to be focused on, doing better, improving your credit, saving up money, and doing what you have to do to take those steps to really get to that goal of getting that house that you want. What I wanted to ask you basically is what I want to ask you next. I want to get into services and specialties, and I want to ask you, what type of clients do you primarily work with? Like first time buyers, home buyers, investors. Like, what is it in your profession that you normally work with when it comes to clients?
Yeah. My typical client is first time home buyers buying their first home, similar to me back in the day. 5% down, 3.5, 3% down. That's typically my niche market, I would say. I think and I think that's probably majority of first time buyers out there. I do work with investors. Um, to narrow it down a little more, I would say, like I do, a good size of business, as FHA loans. So I would say probably 30, maybe even 40% of my business is FHA loans now. And one of the benefits for FHA loans is that you can buy a multifamily, two family, and you do only 3.5% down. Now, what's the big fuss about multifamilies? Well, with multifamilies, you get an additional income, right? So you could live in one unit and you get to rent the other one. So if let's say you have a $5,000 mortgage per month, it may look big. However, if you have one of the other units paying 2,500, now you could be paying same to what you were renting for.
Exactly.
But again, I do a lot of FHA multifamilies as well, and it's rewarding, man. It kind of like very similar to how I started in 2015 with when I bought my first house, 3.5% down, FHA loan, bought a two family, and in 5 years, I mean, that's when I realized, you're like, holy cow, the house is almost doubled, in
Yeah.
price. Not a pretty house,
But still,
nothing,
man, and
not nothing, nothing sexy, nothing, too crazy out there. But did minimal work, whatever, like to keep it in an okay shape. It was built in 1917, but guess what? Value went up, and you're like, holy cow, like
yeah, I think
one
people
of the best investments I've made.
people need to really focus on that. I think that that's something else that people need to just self evaluate also, and make sure that they're ready to accept that they're ready to accept that they can't just jump to the big condos and the big mansion and the big 5 6 family house. It's I feel like just getting a foot in the door whatsoever, even just getting a
One
one
unit,
bedroom,
one condo.
I'm saying one, even if you have, I think people need to understand that that's still a step forward, that's still a step in the right direction. Even if it's a small one, it's a step nonetheless. And
A
I think
hundred
a
percent.
lot of people, when they're like, oh, they get, because it's myself, I've sat there with the mother of my kids, and even though that we're not together, in my mind, I know how it is, and I self-evaluate. I know from me, I can't say I'm a successful entrepreneur, but I'm a continuous, I continue to try all the ideas I get. I'm always jumping from job to job every year. And it's not because I get fired. Like, I get bored. I'll be at a job for a couple months. And if it's not that I see that I could get more money and I've reached a ceiling as to how far I could get, whether it's in promotions or raises, and I see that I'm limited to what I can do and I can't grow anymore, or I can't keep building, I want to go to the next job and the next one. Or if not, I see that if
Good
it,
for you, man.
yeah, or
That
if
resonates. That resonates with
or
me.
or or if you feel like it's stopping you from doing other things that you think is going to take you farther. Like I do podcasts and all this, and in all honesty, I don't make any money off of it,
I
but
know.
I see that it's starting to build up attention and everything, and I'm starting to feel like, okay, it's either I'm doing something right or I'm catching on to something. So it's like I see the momentum, I see the the possibilities of what can happen and the opportunities if I stay true to it and I stay consistent. So it's things like that that make me start making decisions like, you know what, maybe this 9 to 5 job isn't what I need to do. Maybe I need to invest. So it's like I put the time and effort into that, but it's me knowing that that doesn't look good on paper. I know that me going to a bank and like, I'm an entrepreneur, don't worry, I got this, even though I can't, it shows that I've had a different job every other month. They're going to look at it like, bro, we this is not stable. Like, what are you doing? You know? And I understand that. So that's why I try to partner up with the mother of my kids in the sense that even though we're not together, it's what's right is right, period. And I look at it like, you know what, if there's a way that even if it's just you and you can go and get a loan and you can get a house and we can figure out how to do those steps together where you can have that solid foundation of what you're building, you know, I want to take that. So it's that thing of sitting down with someone and making sure that you have the same point of view and the same mindset, because I've sat down with her a few times and it's that discussion or we get into that argument where I see that there's a possibility we can start with a small home for her, but she doesn't want it because she looks at it like, no, I don't want to stay. Sometimes people have a hard time, and it's not to say anything bad about her, but in those discussions, you always come across with someone who doesn't really see the bigger picture, I guess, in a sense, like this is just the first stone to build this big, you know, and it takes time. So what do you recommend, or what would you tell people, like your clients who come in and they get disappointed because they don't get that big loan for the big house, or they don't get the house that they like and it doesn't look as amazing? It's like you said, like, you know, it's a small house, it was built years ago, but it doubled. You know, what do you tell your clients to just give them that security as far as like, you know, trust me in what I'm saying, in the sense of give it time and it's going to be worth it? Like, what do you tell her, or what is it that you share with your clients to give them that security of comfortability of knowing that that's a possibility and it's not just all for nothing?
Yeah. Well, first of all, I tell them to adjust their expectations. So a lot of clients will come in saying, hey, I'm looking at this $600,000 house. They haven't even looked at the monthly payment or what that would mean, right? Which could be a $4,000, $5,000, $6,000 mortgage, which is a lot, right? But when it comes to reality, I pull credit, review their income, assets, everything, and I go back to them and say, hey, right now you actually only qualify for a $400,000 condo. A lot of them, they're like shocked. Well, I have good income. They also have a lot of debt, so that kind of like takes off from their pre-approval. So I tell them, hey, you could wait it out. You could wait out a year, 2, 3, to get to get to where you want. Houses are more likely going to get more expensive. You're going to miss out. What's the opportunity cost between now and 3 years from now? And then second, most importantly, it's like, hey, if you're looking at a single or a 2-family, why don't you start with a small condo? Some of them, they listen, they adjust their expectations, or, hey, I want a house with a fireplace or a pool. To me, these are luxuries.
Exactly.
And if you're in a first-time homebuyer situation, like you're being greedy. Like, no, you find a home that's good enough, that it's safe, has a roof, has walls intact, doesn't have a fireplace, doesn't have a pool, doesn't have all these
Exactly.
Who cares? It's gonna end up building value for you. You're gonna get it right now, in a month from now, and start building equity instead of paying your landlord. And I still have clients that have been looking for 3-4 years, but just the fact that they're so focused in one. And what happened to a lot of those clients where rates went double, from 2.5%, 3% to now almost 7%, right? They completely missed out. And values went up 30-40%.
Yeah, and now they're
2019.
and then
I'm sorry if I'm sorry if it's some of you on this call, but like you gotta adjust your expectations. If you're like, if you're humble enough, be like, yeah, you know what, this may not be the perfect condo, but it will do for now. It's a safe place, good, like just live in there for a year. Whenever you sign on your mortgage documents, closing documents of your house, you are saying that you're going to move in that property within 60 days of closing, and you're saying that I intend to live there for 12 months. If you live in there for 12 months, you could go out there and buy another property with 5% down 12 months from now.
See, it's things like that people need to educate themselves on, because I think a lot of people don't know that. A lot of people don't know that.
Exactly. So that's what I mean. Like, and I have this client closing on May 1st. This is his fourth property. He's under 30. And he's like, if I look at they make good money, but this, they don't have any kids yet. And all they've been doing is hopping from one house to the other, buying with 5% down.
See, would you say that's a good well, not good tactic? Again, I understand it depends on
you gotta, some situations have to work. Yeah. But definitely, that's called house hacking, right?
That's what I'm saying. I know a lot of people have seen it and heard it around there, and it's a popular thing that's thrown around. But again, it's one of those things that you hear the word house hacking, but no one really goes into detail about it. So that's another thing also. Which leading me to the next thing. I wanted to go into like industry insights of and ask you how has the mortgage industry evolved over the years, particularly in response to the economic changes and the market trends. How do you think that's been affected?
So it's relative. So after 2008, during the economic, like the Great Recession, as it's called, a lot of scrutiny was placed on lenders, mortgage brokers. Like there was no such thing as like guidelines. Like there was like no income, no documents type of loans, which they don't exist anymore for at least for primary residents. So you could go into a bank or a mortgage lender, and say, hey, I want to buy this house for 500,000. They would be like, great. How much do you make? You'd say 200 grand. Okay. No verification of income. All that was done was pulling your credit. You had an okay credit that the investors were okay with, and you could close in 2-3 weeks. So that obviously created a lot of people to buy homes as second homes or investments. There was a boom in housing, right? Vegas, so many places. And guess what? When there was nobody to buy those homes, and these borrowers were put in like adjustable rate mortgages, that the rates started changing in 5 years or 3 years or 2 years, not 30-year fixed mortgages. Then they got a mortgage payment at 2,000. Now they're up to 3,000 a month for their mortgage because the rate adjusted to double or whatever, and they can't afford to make that mortgage anymore. And that's why we had 2008. After 2008 till 2010, there was a lot of rules and regulations passed, which has made the industry much more stable, much more consumer focused. And for example, if you come to me right now, you're saying, hey, I make $5,000 a month. Well, the rules and regulations tell us that most likely it will not exceed more than 50% of your gross income. Okay, so there are protections in place for you not to get a mortgage that you cannot afford.
Okay, see, and I like that too. I don't think a lot of people know that neither, because I didn't know that. So it's not even really about getting denied. It's just protecting yourself from putting yourself in a position where you're going to be putting yourself in a bigger hole, basically. So that's something I think a lot of people should be comfortable in knowing that it's there also as well. Because one, I know no bank or no person wants to give money to someone who can't pay it back. But then again, at the same time, it's also something that people need to look at. It's not like, oh, they don't want to work with me. It's just, all right, listen, we're trying to do this for your best interest, because right now you're not in a good spot, and all you're going to do is put yourself in an even worse position. So
Exactly.
exactly. And I think a lot of people, instead of looking at that way, they just take it personal, like, oh, no one wants to give me money. It's like, it's not that. You're just bad with money. You have to understand that first. So that's something I think people need to, again, self-evaluate and understand what their limitations are, their budget and everything, like you mentioned earlier, and it all comes into play.
Yeah.
What about your customer relationships and success stories? Can you share a memorable success story from your experience helping a client secure financing?
Yeah, man. There's so many of them. I mean, I think I've in 6 years, I think I have about 140-ish transactions.
Nice.
So
Nice.
which is great. Um, a memorable one. I mean, the first one's always memorable, I would say. Um, I have a bunch of clients where they were working with different lenders that they didn't see any success. I took them over. Sometimes it's just paying a little more attention, like looking at the details. A lot of lenders, they may skip some stuff or they don't review everything. So just making a difference, man. I mean, like recently I helped another client buy a two-family property here in Boston, Massachusetts. Hardworking family from Cape Verde. Literally, dude, like I get goosebumps right now too. Like same story as us, like they've been working hard. The son, so he's buying. The son is buying with his mom and dad. Son works as a banker, just like I was back in the day. Um, we've kept in touch since 2019. Like he told me, hey Sidrit, like my mom's dream is to buy a house here in the US. We're gonna do it one day. And finally they just closed in February of this year. But it's like, it for them it was a dream, like immigrants came here and now they have a, like two family property, like eight, 900 something thousand worth. But guess what? They'll get a $3,500 rent every month. Like
Amazing.
and and start. So that to me, it's so special, dude. Like, and these are the ones that you're like, you're keeping in touch every year. Either he was following up with me or I was following up. Is like, just wait for me, like, or asking me like credit questions. Are we doing the right things? I'm like, yeah, keep working, keep your debt down, have your credit score in the right place. Dude, they so deserved it, like, and I know he's gonna do big things one day.
I love that, man. I love that, especially the fact that you're focusing on people who come from a background such as yourself, who, because you understand, people, when you've been through that struggle or you've been through those moments where you feel like there's no hope or there's no help or
Yep.
there's no way, and when you finally figure it out, I could relate to that. It is really relieving, and it's a good feeling to help someone else who is such as yourself, because it's hard. It's hard to find people willing to help. It's hard to find people willing to give you the right information, especially nowadays. Nowadays, a lot of people want to fake the funk and act as if they're really trying to help you, when really that's just the norm. That's like the business tactic of, oh, let me help you and let me. But then once it gets to the point that they got what they wanted, that's it. A lot of them won't keep in touch. A lot of them won't answer after they've closed the deal. That's it. They don't want to deal with you no more. So the fact that you're taking that step and actually just staying in contact, and you actually, just in the way you're speaking about it, it goes to show that it was something that you really felt it was an important moment, not only in your life, to pass that on to the next person, and give them
100%.
that help and that security, where now they feel, what, I'm doing something, I'm able to do it, because that does a lot to somebody. Being able to buy a house, it would make someone feel on top of the world, especially for your family, especially in a situation like that. Like you said, like being an immigrant and coming over from another country and everything, especially doing it to have a better life. And, feeling like, especially if they've been here for a while and they haven't caught a break, and then finally finding someone who understands, who's willing to help and give them the time and the proper information. I really appreciate you doing that, because we need
Thank
more
you.
people like that. We don't have enough people, whether it's in this space specifically or just in general. It's hard to find good people nowadays. Everyone tends to feel like, not gatekeeping, but they look at it like, you know what, there's not enough. So if I did this and it worked for me, I got to keep it to myself and no one should know about it. So
And,
it sucks, because again, it's like this information is out there, but we just rely on so much of just googling stuff and clicking the first thing we see, instead of taking the time to go through it and not noticing that the fourth or fifth link going down is the one that we're looking for. We hit the first one and then we see all these things and we're like, yep, you know what, that's not me, that doesn't work with me. Meanwhile, you're the third or fourth person down that's really willing to help them and give them the proper information. But
100%.
how do you approach building trust and long-term relationships with your clients, like you have, in the sense that, you mentioned he still keeps in touch with you, and you guys still give each other information back and forth? How do you do that? Is it specifically just that person because of the way that you were able to relate to them, or is it like that with all of them, or how do you go about that?
So, I mean, I think it depends on, first, I would say how many touch points you have with that person. I would say the best way to build trust, even though this is the way that takes more time, is to meet in person. If you're in the sales industry selling, whatever product you do for your work, the best way to build trust is in person. Second to best is probably what we're doing right now, right? There's a feel, there's, maybe not physical, but we're seeing each other, hearing each other. Third, I would say, is just through the phone, and then fourth, it's text messages, emails. Those are very cold type of reach, not warm in any way. But the more of those you do, the like chances are that you'll start building trust. Now, with this particular person, I used to be at Santander, and we met. He used to work at the branch, so that we met in person. Like a couple of times. Other clients, I think it's a mix. So, for example, I will get my clients referred to me by realtors, CPAs, attorneys, or let's say past clients referring their friends and family. If it's a referral from a realtor or other referral partner, it takes time to build trust. I'll do like a loan consult initially, either through Zoom or just a call, which is good, but I feel like you need more. So I have a CRM that touches them, like every so often, every 2 weeks to a month. So stay in touch. Sometimes you do follow-up calls to see how they're doing. I would say I've seen a difference whether the referral is from a referral partner or if it's a referral from a past client. When it's from a past client, people tend to believe their family more and trust their family more. So those, I feel like I get to build a relationship much easier with people who I've worked with in the past, and they're sending me their family or their cousin or their friend. I feel like there's much more trust. Trust is built easier. And ultimately, I would say it's your reputation that will continue to keep you in business. If you say something, do it.
100%.
Like, do not drop the ball. If you say that I'm gonna call you today at 1, just like we scheduled this together, make it happen. Don't ghost people. If you make a mistake, apologize. I think the apologizing part is a big piece where I see a lot of people dropping their ball, where they drop their ball and they pretend it was your fault, not theirs.
a hundred
And that I think that's like where you're gonna lose all your credibility. People are not gonna want to work with you. Like I said, if you mean something, do it. If you mess up, say, hey, I'm sorry, something came up, I apologize, can we reschedule? Whatever the reason is, be honest. It's okay. We're all human, but yeah, just I think by being genuine, um not like be yourself, man. Like that's my main advice. Don't pretend to be something you're not. Like It's okay. You don't know something. It's okay. I started in this industry from nothing. Just be like, hey, let me look this up. And you mess up, say I'm sorry. Like there's gonna be a time where like you're a loan officer or car salesman or whatever. Sorry, I don't mean to compare loan officers with car salesmen completely, anyways, like you make it a mistake in your job for whatever reason that is. You promise a client that you can do it and now you can't any longer. Admit it.
I agree with you, man.
It's gonna give you so much, like, like
It's
like
more beneficial than it is. You get more from it than you would from trying to avoid it. I think what it is what really happens, and I agree with you because I've had similar situations myself where I just got a little overwhelmed with podcasting and everything. And it was before I did like the second season, and I was all over the place trying to do too many things at once. And I had like a lot of scheduling conflicts, or people would cancel and this. And it just got to the point that I started thinking, all right, maybe this isn't for me. Maybe I'm just, when really it was just that I needed to slow down. I needed to stop,
yep.
booking back to back. And it was something I needed to do, because then I started looking at like it's the other person's fault, and it's, oh, they're canceling on me. And really it was just, I didn't really look at it like, yo, you're kind of all over the place. No one wants, like, would you want to deal with that? And after doing that and admitting that to myself, I took a step back and I started taking it more slowly and building up. I basically just started all over from scratch. So I completely agree with you that it's one of those things that you just got to be honest. If you could do it, you do it. If you can't, just say it. Say you can't, but work with what you have and be
Yeah.
honest. Don't ever try to over promise something that you can't deliver. And I've learned that, and I completely agree with you. And you sharing that makes me want to go into the next thing of professional growth and your future plans. Like, what are some key lessons you've learned from owning and operating your own mortgage broker company? Because you went, like you said, you went from working at a bank and you looking for a house with your wife yourself to now you're the person helping other people do that. So, what are some lessons that you've learned doing and owning and operating your own mortgage and broker company?
Well, I'm gonna say that. So, like I mentioned earlier, I've done a lot of changes over the last 13, 14 years, especially when I was in banking. There was times that I was moving within like 6, 7 months, right? At the time, like maybe I was focused a little on money. Like there were things that I didn't like from a bank, for example, or my manager, my direct report, that I did not appreciate or didn't think it was right. But I made a lot of moves, right? Looking back in hindsight is probably the best thing I've done. If I had stayed at the same job, let's say for 5 years, I would have gone through this in terms of growth wise. I would have, pay wise, like money, I would have gotten that 2 to 5 to 3% raises, right? Which I would have been so way back, right? Financially. Second, you get to deal with a lot of different people, right? And that, little do you know, but that becomes your network and your community over the next 10, 15 years. And some of these guys are my clients now, right? Um, but the biggest lessons, I, I'm gonna say, don't be afraid for change, man. My last job in mortgages, it was a partnership with another guy, right? He had opened the company. I was joining in as a partner. It didn't work out, right? But in that 7 months, I learned so much that it got me to. I mean, I knew a lot, but that 7 months like put me in a place to say, fuck it, I can do this on my own. You know, so you have to experience those difficult moments in order to be in a place where, like, you start your own business. Or again, there's a lot of moving pieces. Like I did have some reserves on the side. Like if you're not in a good spot, like financially, you gotta try to move up a little, right? um Whether that's working in the same job for 2 years or different many jobs, like, but you got to elevate your game, buy your first home, right? But I think the difficult decisions are probably going to be your best ones to take you where I am now. And again, I think, like I'm confident this is going to work out for me. I'm very passionate about what I do, but it cannot work out too. I don't know. There's always a chance of that, but I think without changing, without trying, without going through the difficult situations and difficult people and managers, you're never going to find out.
I agree with you. I think all those things help eat from the people you meet to the things you experience. It helps mold you and help you evolve in some way. The good, the bad, the ugly, whatever it is, all of that. I think the best way to learn is through firsthand experience. A lot of us try to learn through other people. Sometimes it works, but I feel like we really don't. I think there's little lessons that you don't learn or you don't really have engraved in your head unless you do it yourself. Like, messing up or forgetting little things, it's one of those things that when you do it and you get in that position, you're like, you know what, I want to make sure this never happens again, and I'm never feeling like this, or I'm never to the point where I'm nervous because I don't know what's next and I don't know how to handle it. When it's something that you expect, it's good because you expect it. You know how to bounce back from it. When it's not, you start panicking because you're not used to things not going your way. And then you start flipping out. You start depending on people. You start, just walking away from things and goals and plans because you look at it like, this wasn't how I envisioned it. This wasn't how I thought it was going to go. So let me just leave it alone. Instead of understanding that, you know what, this is part of the process. I need to change. Clearly, if I'm not ready for this or I don't know how to handle it, this is something I need to adapt to because it's not, I can't ignore it. It's going to happen. If I want to take this route, I have to pass this road, this wall. I have to go over these speed bumps. But you have to understand that the road still keeps going. It's not that it stops right there. So some people can just get over that and accept that and learn that they just need to adapt, like you said, and just be willing to deal with change. It's like you're saying, it's the best thing that you could do because that's what leads you to improve and be better and have that knowledge and experience to pass on to the next person, or not even, it's just to avoid repeating those things that keep pushing you back and holding you back. When someone keeps meeting all these different walls and barriers that are stopping them from going forward, they tend to feel like there's no way to go. They don't understand that they could go around that or there's another way. They just turn around and start going right back to whatever it was they had before. So I really, I respect you for going through those things and adapting and, not just saying, I had a partner and I was going to do this and it didn't work. So I guess, it's not an option. You made it work and you're doing it yourself and you're moving forward. And it goes to show that it's something you have a passion for. It's something that you really care about, from the way that you speak, the conviction that you have, and knowing that it's going to lead to
Thank you.
something. I love all that, man. It motivates me. And I love seeing other people. I've loved watching your growth. I've seen how you went from starting it to where you are now. That's why I'm like, you know what? A lot of people talk stuff and you want to talk to someone, but you always have it in the back of your mind, like, if that person's not in a certain position that I'm trying to get at, what the hell are they going to tell me to help me get? You get what I'm saying? So it's things like
True.
that. So when you're speaking everything that you're speaking, it hits a lot differently because you can tell from the way you carry yourself that you're not just saying it, like you're living it.
Thank
This
you.
is what it is, and that you're actually willing to help. Like you're showing that, you know what, I'm not just saying that I'm willing to help you. I know the information, I'm willing to help you, and I understand because I've been through there. I've been to where I had nothing and I didn't have enough and I worked my way up. And you're trying to tell them not just by what you're saying but by living proof, like, listen, it's possible. It's not that it's that you can't do it. It's possible. I'm living proof of it. Let me show you. And I love that. I love that you always portray that in your messages and the things that you share to people, and that you're actually trying to just educate people properly and help people avoid that thing of like, it's not possible. So I really appreciate you for that, honestly.
Thank you, bro. No, I appreciate you. And we kind of are in the same space, on Twitter X, like we're big supporters of Gary Vee. And he's obviously been a big, like motivator and supporter. Like I asked him at VCon 1 to be on my podcast. He showed up for 5 minutes.
Nice.
He didn't have, like I haven't really done much with the podcast recently, but it goes to show that sometimes it's not going to be monetary. Sometimes you just got to help people, right?
Exactly.
But for me, that meant the world. For him, it's nothing, like he spends 5 minutes. I didn't pay him nothing, right? But he knows that touch that he did that day, like on the podcast, like it motivates me, helps me do better, and he knows that I'm always going to be his one of his biggest supporters, right?
Exactly.
And I think that's what people need to realize, that like it may not be a short-term gain, but it could mean the world to someone, like again, if you have the time, obviously we have family, we have other things, but just try your best. I also believe we're in the greatest country ever. Like you could be without a job today, land a job tomorrow. We have
100%.
freedom of speech doing what we're doing,
Yes.
and I think people uh, definitely it's so underrated. Like
Yeah,
people
they don't know.
don't know what
Yep,
we have here. It's
exactly. They
like
don't
we
they
can't take it
haven't.
for granted.
Yeah, they have exactly. They haven't been through things such as yourself, from being an immigrant from somewhere else. They don't understand the privileges that we have here that are literally overlooked, that other people don't have. And it's
Yep.
not even just about having a roof over your head and running water and all this stuff. It's
Yep.
literally just the way that the society is, the way that things are accepted or just brushed off over here compared to other places where literally you can get your hand cut off for like the slightest thing. It's
Yep.
exaggerated, but it's
Yep.
literally like that. It's just, there's some things that in other places it's just like freedom of speech. You wouldn't think that speaking your mind could get you in trouble, and in some places, like saying the
Oh yeah.
smallest thing like the weather sucks today could get you in jail. It's
Yep.
crazy. But
Yep.
what I wanted to ask you next is, what do you see the future of the mortgage industry heading, and how are you preparing for it?
So we definitely know AI now, right? I mean, it's here to stay. It's already being implemented by the bigger lenders. I think right now, what they're doing is like some of the underwriting pieces that they may be using AI to handle it. So it's being used to streamline the process even more. Mortgages and real estate, or loan officers and real estate agents, have been one of those jobs that have been slow to adapt to the changes in technology and everything else. I think eventually we're getting there too. We have adapted. Like, I've seen a lot of changes in the last 6 years in terms of technology, how we do things, applications. 10 years ago, actually no, sorry. Even in 2018, when I started, I was taking some handwritten application. My first mortgage broker that I worked for, they didn't even have an online application.
That's
So I was filling out paper applications. So which that doesn't happen now, unless like I haven't had anyone, to be honest, recently handwrite an application. But we've come a long way. I think AI is going to change the industry even more, make it faster. If we're like if we're using AI or maybe the blockchain technology to get things verified quicker, safer, more secure, we may be able to close on homes quicker. But at the same time, in the real world, let's think about it. You're a seller, you want to sell your house. You're not going to plan to move in a week. You're going to give yourself 30 days to. So right now, before we used to be in a situation where it would take 40 to 60 days to close on a home for the bank to be ready. Now I close loans in 20 days, 21 days, if all the parties are ready. It's going to get even quicker. It could get to a number of days eventually. But thinking about the real world, your sellers will always need that time to move and plan, and you put the house on the market, showing it. So um, I am like I'm confident it will get easier. I think the way that the system works is working well. Like there, like these loans that gets that one of my lenders originates today, or closes on today. They get packaged and sold on the secondary market. So there's investors that buy these loans. They're very, very safe products. They're 30-year investments type of thing at a steady rate. They do get refinanced, like so. Um, the way that it's been set up, it's very, very good. I don't think that the government should change it or step in, because when the government touches some stuff, they make it worse.
Yeah, 100%. I
um,
agree with you on that. I agree with you on that right there. Um,
but yeah, go ahead.
what I wanted to go on next, we've been going on for an hour and 24 minutes. We got around 20 people watching us here from YouTube,
Oh,
Twitch, and
cool.
X.
That's awesome, dope. I
So
didn't even know.
yeah, I know, and that's what I hate. That's the only thing I hate about this is that when you have guests, they can't see it. So that's why I try to mention it just to let them know, we got people.
Cool.
The next thing I wanted to get onto before we get out of here, community impact and involvement. Are there any community projects that or are there any community projects related to home ownership that you're passionate about or involved in right now?
Personally, no. I have 100% of my attention in my own business. What I do is the last 3 years I have done like networking events where I bring in industry leaders, folks to get together, network, have a drink, some food. I've been doing it beginning of the year, kind of like to start the year off right. Typically 100 120 people events. We just had our latest ones. I'll partner up with, let's say, another like attorney or a real estate agent, and we'll throw a joint event. It's good to bring the community together. No, personally I'm not involved. I'm not afraid to say it. I'm not at a spot to be in a philanthropic position. I do give back to like organizations, like write small checks as much as I can. But right now, my focus is on my business, which is helping people buy their first home. And once I am in a position to write, big checks to other companies or give my time to them, I definitely will.
That's awesome, man. That's a big thing too, to be able to give back and whenever you can, especially, some people they forget that to make sure to keep their community thriving and to keep everyone educated and everything like that, which is the next thing I wanted to ask you is how does your company contribute to educating potential home buyers or investors?
Every day, man. I mean, I'm talking to a client at least once a day, or I'm talking to someone. I'm talking to at least one person a day. If not more. It's a one man company right now. I mean, I'm relying on contractors for various type of jobs, um, like processing, but right now it's me. It's a one man show. Like my goal is to eventually hire more like personnel where it's helping me with more of the admin side of things, which will free up more time for me to give back even more to my clients. And eventually I would say hire other loan officers, not too many. I don't Right now my goal is not to like build a company of like 100 loan officers. I want it to be very targeted, maybe me at the top, and then we have a team of 5, 10 people, and those are directly helping my clients or their clients, and giving back more to the community. Sometimes quality may be better than quantity.
Agree.
It's tough to find the right people, but yeah, educating. I mean, I do a lot of like first time home buyer seminars. I visit like real estate agents in the area, in their offices, give them small presentations about what we offer. We'll continue doing that and expanding it.
I love that, man. So I really like what you're doing, man. I like the way that you're going about things. I like how you're focused on people who truly, you're focusing on the little guy, not to say it in a bad way, but you're
No,
focusing on
it's
people
fine.
who are just like us, who are starting from nothing, who are starting from not having much, who honestly just have a dream and have high hopes. And honestly are just trying to live the American dream, just trying to get the house with the
That's
white
it.
picket fence with the family, you know what I mean? And I really love that you're helping people try to reach that goal, you know. And I feel like I'm a Spanish, I'm a Latino, you know what I mean? So I consider myself as an immigrant also, even though I've been born and raised here, but my family wasn't, you know, they came here with nothing. And, you know, not that we have an amazing life right now, but I'm very appreciative of what my parents, you know, worked for and what they gave me. And I understand and respect the struggle. You know, I know what it's like to not have anything and to try and make something from nothing. So I want to appreciate you for one being an example of that, but also giving that hope and that knowledge and that courage to those people to take that step so that they could do the same as well. So I really want to thank you for that. I applaud you for all you're doing and all your success.
Thank you, brother.
Before we get out of here, is there anything else that you want to let us know, share with us, anything that you're working on, anything that you're thinking about, you know, starting, or that you want people to look out for? Again, anyone who's watching this or listening, all the information so that you can reach out to Sidrit is going to be in the description below, social media, email, and anything like that he's willing to give me. So would you like to share
Yep.
anything before we get out of here to all our listeners?
Yeah, well, again, I want to say congratulations on your podcast. I
Thank you.
see the
Thank you.
consistent work. You know, even if it's not super consistent, you're there, you're doing it. Whether it's to improve your communication skills, you know, like I resonate so much with you because we're doing similar things, even though in different industries. I'm currently licensed only in Massachusetts as a loan originator, but if you guys, any of your followers, listeners, have any questions, follow me on Instagram. That's my main channel. I do have YouTube and TikTok, you know, trying different things out, but Instagram is the main social where I'm at. It's my first name, Sidrit.Veseli, on Instagram. So if you want to shoot me a direct message, questions about mortgages, anything, I'm happy to help, even though I may not be licensed in your state. Yeah, I mean, in terms of next steps, I'm gonna continue working hard on my own business, trying to grow it, help as many people as possible. And yeah, I mean, definitely want to do more social media. That's the goal, you know, like um, eventually would like to be in a position where we're not just helping 140 people every 6 years, but maybe 1,000, 10,000, 5,000, just so we have a bigger reach and be in a position to help more folks, you know, like continue educating. No BS stuff. You know, I know there's a lot of short videos, reels, you know, TikToks out there, you know, a lot of clickbait stuff. You know, like I try not to get caught up in that and try to provide value back to people. I think it's so important. And then we have these conversations, the one-on-ones, which are also super important, where we build these relationships. And you know, hopefully we get to share a big podcast one day, or a big stage together, you know, like that. These are kind of like my dreams, you know, like down the road.
I agree with you, man, and I'm for it, man. Anytime that you wanted to chop it up and talk some more stuff so we can inform people, I'm totally with it, man. Just let me know.
Let's
My
do it.
inbox is open. Also, I'm definitely gonna be hitting you up a few times, man. This is something that I've been trying
Anytime.
to work on slowly. I'm trying to save up and like I said, I mentioned, you know, trying to look into this with the mother of my kids and get things going. I've mentioned this to you before, and you know, I feel a little bit more comfortable with the information I got. I'm taking notes and stuff like that. Also, I'm definitely going to play this back
I
and
love it.
go over a bunch of things also, and I'll be in your inbox asking you a few questions as well. So
And
thank you
I,
for your time,
yep,
Cedric. And, you know,
my
anyone
pleasure.
make sure that you go hit him up with a follow. Again, all his social media information I'll have in the description below, to wherever you're listening or watching this. Clocking Out Podcast is on all audio streaming platforms, so it doesn't matter whether you're on Spotify, Google Play, or any of them. We're all over the place, so you'll be able to listen to it. We're also on YouTube, we're on Twitch, we're on X, we're on Facebook. So there's no excuse. You can get access to this information wherever you are, and just make sure that you check the description and hit Sidrit with a follow, show him some love and support, and check out his content, get informed, get educated, and start taking those steps. You can get yourself your first house. You know what I'm saying? Sidrit, thank you for your time, man. I really
Appreciate you, brother.
appreciate it.
Thank you for having me on.
Thank you, man. And
Thank you.
everybody else, take care. This has been another episode of Clocking Out. I love y'all. Stay safe. Peace.
That was awesome.
See you later, man.
See you, brother. Thank you.